All right, guys, I want to introduce you to something new we added to the Discord. I'm helping folks pass their evaluation accounts with Apex or Elite Trader. So I'm going to review the trades that we took for the week and see why I took them, why my entries and exits were the way they were. So if you're interested in this as well, you can do a 100K static, and it's sometimes there's coupon codes for 80% off. The 80% one off just expired, so now you'd have to use code SAVE50 for 50% off. I'll toss it down in the description if you're interested. Just so you know, disclaimer, I do get like $5 if you sign up. So it is hooked up through NinjaTrader. I do have a strategy set up, and you can see it right here. This is for micros. So what it'll do is it'll get you into 5 micros. It'll take the first profit at 5 handles, then 10 handles, and it's looking for 60. This is the auto trail stop loss if you're looking to set up NinjaTrader with an ATM strat. So let's just review throughout the week. So we started right in power hour. We're waiting for power hour because we were looking for 411.15 buy side imbalance, sell side inefficiency. We longed 2 at 41.41 with a stop loss at 41.39, and we went into voice chat. Okay, that was the 13th. Oh, well, this will help out. Let's just do that. That was this level. So why did I take this trade? You can see where I bought and where we sold. And what we were doing was we had a confirmed structure break, right? So this was a high. These are relative equal highs. It was ran. Price, did it trade back down into this level? No, it didn't. Actually, hold on. It looks like we tried to buy, then we were stopped. Okay. So you can see right off the bat, I bought 2, stopped on 2. Okay. And if we look back at our next trade, I bought 1, sold 1. The thing that's different about the quantities is my size changed because I was wrong on my first trade. I can increase my size when I'm right, but not when I'm wrong. Normally, you'll give yourself 2 to 3 trades to be wrong, and then you're done for the day. So this was trying to go long, stopped out. This was trying to go long, and it printed. But if this stopped out, then on my third trade, I need to try the trade on the downside. You need to see if you can get right with the current trend of the market. So anyways, what happened? We have a break of structure here. We ran these highs. We traded back down into 50% consequent encroachment of this candle. This is hindsight though, right? Really what we're looking for is an entry like right here, right at 41.37. That's a good buy, but it never came. So we broke away again. We created more displacement up, okay? And then we have this large candle down. All right, now this displacement down is a little worrisome to people. You can see where I bought right at this line, right in this fair value gap. Where did price trade as low to? It traded to as low as this imbalance here. Okay, that's not what you generally like to see. It didn't stop me out. It was 41.39 is the almost as low as it got to. I run a 5 to 6 tick stop. So 41.38 and a quarter probably would have taken me out of this trade. All right. Now, when you get long here, I'm looking to run this high at 41.46, and I did get filled out at 41.48. Our price target on this was 41.50 when we were doing it, but we were also trading within a certain time frame. So my time frame ran out, and that's why we closed the trade. Okay. And then this is what that looked like in TradingView. Okay. What happened here on the 14th? We were hanging a bid at 41.17. We're looking for a push down past into 41117, which is right here. Now I remember this day because we actually hopped on voice chat. On voice, we got filled at 41.15, but you're up good. We took a partial. It went to 41.43. Here's the recap of the trades. There's our buy. Bought 1 because we were knife catching. Right? This isn't a fair value gap or something structurally that we're adding with high conviction. This is expecting something to hold. So we size light when we do that. But 1 at 41.15, we were 5 handles in the green, and we saw that it was working. So what happened? We buy another one at 41.20.75. So then we can go to our second. Now, with this 100K static, 2 mini or 2 micros is our max position size until we get to $500 in equity. So once the account's at $100,500, then we will begin increasing our size. Okay, we took profit for 20 handles here, and then we took profit again at 41.69, and that was an overshoot of our target. Okay, so what happened on this one? We were looking to buy right here. Okay, so our first buy at 41.4250 was an attempted knife catch. That's why it was 1, but that's an aggressive entry long. So we only went with 1. And then this is an optimal entry long at 41.35. Bought them both, stopped out of both. Bought another one at 41.21. Rode it up. We were up to 41.40 and we failed. Got stopped out for a slight profit, but we still got stopped out. Bought one at 41.32. Oh, maybe no, we bought one at 41.32. We were stopped out at 41.22. So 10 handle loss there. Then we were targeting this high, and we added 41.1575, sold it at 41.23. We got stopped out. So we got stopped out, but we were looking to run this level here and then up into this fair value gap, which would have been 41.50. So left some money on the table with that trade. This was the recap of the trades. So we had our midnight open. This is a perfect example right here. This stopped us out. We went long here. This stopped us out. Exploded up. Traded back down. Okay. And what I'm hoping to do by this pass your eval subcategory is to help understand risk. Okay. So that's where we caught the 40 handles. It was really 60 because we had 2, 1 for 20, 1 for 40. 41.29 on the 15th. 41.29 could be a spot to place a bid with a 41.28 stop. Loss of that fair value gap will target the one beneath it at 41.20. Same with 41.34 versus 41.32 stop. Now we took that for 10 extra handles, take partials. Just got home, took a single trade on an eval account to get credit for today towards our 7-day goal. Let's add 41.4950, which is here. So you can see we broke the structure. So we're expecting to continue marking up. We're looking for a trade back down into here. Come fill these orders and then get going. Filled. There was 6, and this is how the trade went. Boom. We were targeting 41.60. It did end up printing that. So here's a good example of what happened on the 16th. This is yesterday. I went long 41.22 with a stop loss at 41.19. 1 micro, got stopped out for $20 loss. Okay. The levels for the day were 41.10, 40.90, and 40.50. And our rejection risks up above were 41.20, 41.38, and 41.50. What we were looking for was a break above 41.10. So we tried at 41.0625 with 1 micro with 41.035 as our stop loss. Got stopped. That's 2 losses in a row. We're allowed to lose $90 per day. That totaled right there was negative $36. Okay. So we had a structure break. It was 2 breakaway gaps at 41.07 and 41.04. And then we wanted a confirmed break above 115, 41.15 to get long. I put a bid in at 41.09 and a half. 41.04 is the stop loss. Target's 41.35. Got stopped out again. That's 3 trades in a row. Still hadn't hit our max daily loss yet. So then what ended up happening at 10:07 a.m. yesterday? Okay. This area right here was our bid. Stopped out. Boom, boom. And what I was looking for was for 41.15. So I wanted to see, I needed price to be trading above 41.10, and I needed it to break 41.15 for me to want to get long. What ended up happening is we kept going down to 4100, bouncing up, bouncing up. This is consolidating, but I don't know if this is consolidating to drive down. Okay. Because as you see, it kind of looked like it could. All right. Now I was also looking that this could possibly be like a Wyckoff, like a spring. right? Where you drive down a little bit lower to instantly run up. But we didn't know this at the time. So got stopped out again. Here's where we cleared 41.15 at 10:07. 10:07. 41.11.50 is a fair value gap, and where my bid is at 10:12 a.m. Yes. So this candle here broke 41.15. So where was I looking to add? I was looking to add right here. 41.11. This area, this box was my add. And where did I put my stop? Price should not trade below 41.09 right here. See how close that was? The difference between getting stopped and going. Anyway, we'll continue. But this is where we added. Boom. Get going. Okay. Now what was my price target? Sell limit 41.35 to 41.36. So 41.35. So why was my price target here? Well, this fair value gap here. 41.35, nice low hanging fruit. We took it. The obvious spot to target is right here. Very obvious to target this level. But the rejection risk is very, very high. Okay. So I'm okay with getting out here, seeing if price runs this. Because if it doesn't and price gets up here, rejects down, maybe I'll look to buy to run later. All I know is right then and there, I want to get my profit. Okay. I said you could trim a small amount of your position along the way up. The 41.16 range liquidity will be a weak spot to target later. Expect it to hold for now. 41.16.25 at 10:30. So this level here, I said you'd want to target later. This was not a strong spot. And what that means is when you're creating obvious points to attack later, they will get blown through. You're not going to see a ton of buyers step in here because these are just emotional buyers to push price up. Okay. Same thing with eventually I said this level here will be targeted later. Okay. Because this is sell side liquidity. And that's what we'll do. That's what Marquez says. This is obvious sell side liquidity. Just like this is obvious buy side. I can kind of see what ends up happening. But 41.24 and 41.18 downside target if we expect to hold if we are going to climb to 41.36. 41.24 held for now. And our account balance at this point in time, once the day was over, was $100,000 or $100,638. Okay. You only need $200 per day for 10 days to pass the evaluation. So 41.35 hit. Wouldn't be comfortable adding this, even though they are relative equal highs. I want to see price action at 41.20. So at this point, I said I want to see price reaction to 41.20, which is down here. This level concerned me. Because when you mark up and you do not trade into an area, that's an obvious liquidity point. Price will try to find its way back to this at some point, and you don't know when it's going to happen. But if you're already up to 41.35 and you have something 15 points below, you could see some aggression come through, and you don't want to sit in a drawdown because you could just add back at this position. 41.2875 needs to hold. And then I said at some point, there was a high risk short that was confirmed to be obsolete. 41.2875 needs to hold this low. Okay, because we traded back into this imbalance. This needed to hold, or else we were worried about the down here, this level. So marked back up. What would most people call this? Oh, it's a double top. It's not just a double top. It's, hey, you ran these stops, you ran these stops, twice. You could not push through here because not many people had stops up here. If they did, they would have been ran. Okay, so price has finished running buy side liquidity. Now what does it need to do? It needs to run sell side. Where's your obvious sell side? All your weak points. Here, 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 here. Possible bounce here, here. Possible bounce here. And then your opening lows. 41.32, draw a box on that volume imbalance. What did I have here? These levels. So what you had here is a 1 minute candle knife completely through and a bunch of wicks. So at this level, I was saying, this could be an aggressive short. I would have shorted that if I was home and see if she makes a run for sell side liquidity at 41.25. Giga wrecked. Must have got wrecked. Must have traded right back through it to the upside. 41.33.25 bid. Do the at the money strat or go with 2 pills with an 8 tick stop loss. Okay, so that's a 2 handle loss. 41.33 at 138. Right here. Perfect. This is a great example. What I was looking for is to see if this level here would hold. Where would your stop be in this scenario? If you've been trading with me for the last, I don't know, 5 months, you would know that it needs to be right there. Okay. So if you buy this, it's with the expectation that this wicks down, runs these 2 sell sides, and then runs back up. But if you're wrong, where could it go? Oh, you got a lot, right? We've already talked about that. Where was your first inkling to go short? That could be tough, and it would be hindsight trading, because I could say, hey, this displacement down that broke structure here would be your first inkling to go short, because not only did it break structure and then return and fail to mark back up, but then it broke again. So, but I mean, that happens a lot of times where you break, let's say this one, broke structure, marked back up, failed, but then eventually made highs, right? So that's why it's high risk, because you have to have a stop right there. So if I would have broke here, sold short here, my stop loss would be where? It would be right here. 42, about a 3 handle stop. I tried to log this, found out I was wrong. Okay. The very next wick came back up and I would have been green. Would I have chased that? No. No. If I'm wrong here, then what I'm expecting to happen isn't happening. If I was trading this is how I'd mark it. I would say this line here. Let's take this up here. Double top. This was buy side liquidity, ran. Optimal trade entry, short. Boom. Now what have you done? You have ran this structure here. This was a BISSY. Failed, failed, down, down. This is where I wanted to see price reaction at 41.24 and at 41.20. Boom, 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 knife, 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 ran all the way down. In hindsight, it's super easy, right? That's hindsight. You got to be able to do this when you do this with live funds. 15-minute hindsight, it was very clear. We had a return for shorts from back from a premium to short, back into their discount, fair value gap, short it. Okay, right here, fair value gap, that was a BISSY, turned into a SIBI. Okay, obvious low, ran it. Shorter time span, change of characteristic, break of structure, sell side liquidity. Easy points to target. We were interested in 41.20, clearly did not hold. Breakthrough with displacement, boom, boom, boom. Didn't even give you a chance to get into the short, except for up here. And that's how she looked. This is where we took our long. We tried to buy the dip one time. Today's price action, I said we'll probably see it pop to 40.90 rated open and then instantly fade down to 40.50. That gives us a Judas swing that clears buy side liquidity as overnight high. Okay. Between 40.90 and 4100, do not trade. Above 4100, you can look for 4120. And then I said at 40.90, you could possibly do a short with a 40.91.25 stop loss. Don't try any longs until you get a confirmed structure breakup in between 9:50 and 10:10 a.m. See price action at 40.74 for a possible short with 40.76 stop loss today at 9:42 in the morning. This is today's price action. Here's what I saw. We have our overnight low right here. Open the day. I said I'm looking for a confirmed structure break to either get long or get short. What happened here? Boom, boom. Peaked through the overnight low. Okay, that's a confirmed structure break to me. So what am I looking for? I'm looking for a fair value gap. Well, right here we have a volume imbalance, and right here we have one as well. So this is our aggressive trade, and I like to do this right off the open. Okay, just to purge sell side. I took this short, targeting 40.50, and where did we get from here down into 40.57? So in the ATM strategy, 4 out of 5 were gone. And then our stop on the final micro was 40.63. And our take profit was 40.51 at 40.63 at 9.57. 9.57 right here. Okay. Once we hit this level, I said take profit because I saw something that I didn't like for continuation down. So what did I see that I didn't like? These 3 candles. This is a swing low. Down open candle that closes up, and then a break above this one, this level. Okay. I do not like that. So I said to, once this candle closed back down, I said to put your stop right at 40.63, which is right here, because price should not trade above this level, which was also what level? This candle. It shouldn't. This here is permissible. Maybe a slight dig into it, but no way should it come back above here. Once this happened, I said, let's chill and see what she brings. I said at 40.62.75, I'll take one long to 40.90. We got left at 10.02. So after we got stopped out right here, I was looking for a return back to that level. So let's just move this up. And I was looking for a return inside of here for me to get long. Didn't happen. And then we're looking for if 40.67 holds, then it's a confirmed breakaway gap down to where the 62 bid is. 40.67 is this level. So what are we seeing here? Same scenario. Here to here. Hooks in, digs in, goes. What are you targeting? Obvious liquidity. And I said we were targeting 40.90. Where did we hit? 40.88. See, so 40.90 is our resistance. Why did I choose 40.90? There was something going on with 40.90. 40.90. This final high here. Not to be super greedy or anything. I mean, 40.85 was a good spot too. Confirmed. 40.67 was optimal trade reversal. And that's it. Okay. And then if you remember earlier, I said to short 40.90 with 40.91 being your stop. Eventually we did get our way up to 40.90. Let's just draw 40.90 right here. I actually clicked it a couple times. Okay. You would have been filled on your short and you would have gotten, you got 2 lows here, but you would have gotten filled on your short and you would have taken profit. I'm sure if you're 20 handles in the money, you would have taken it. But anyways, so that's how it's going. Our sim accounts are doing well. We have only had a few losing trades, but obviously one win will wipe out up to 5 bad trades. So that's the way we have it set up. And we haven't been on a big losing streak, and we haven't been on a big winning streak, and we're halfway finished. So I'll continue this until everyone is passed, and hopefully you can, send yourself a couple $1,000 every month, and it'll just lighten the load if you're, if you have a 9 to 5 or work Monday through Friday. You can follow in the Discord. It is free for this channel, so you don't have to pay money for it. So if you enjoyed, like, subscribe, follow along. Enjoy your weekend.